If the price flashing on your screen is totally made up, then what? Not rounding error, not a short delay, not a harmless glitch. If your broker app and every finance site shows a number that has zero relation to the real physical price right now, then what? Right this second, someone in Shanghai pays $101 per ounce for real silver you can hold. But someone in New York is told the same ounce is only 89. That's not a difference. That's a $12 confession. And nobody on Finance TV asks the basic question. Why? Why when real buyers show up, the same metal suddenly costs $12 more? Why does the price collapse only inside the paper contract market, where paper ounces are many times bigger than real supply?
This isn't time zone lag. This isn't local premium.
This is the system telling you one thing. Physical demand is pricing higher, paper claims are pricing lower.
And the gap is getting loud.
Now look at Wednesday, 12:15 p.m. Central Time. Silver futures trading around 91.30. Price climbing. Momentum building for days. We already marked 92 as the next key resistance. The market was walking straight toward it. Then, no warning, CME metals and natural gas went completely dark. Not slow. Not lag. Stop. No bid. No ask. No trades. Just frozen numbers, while the rest of global markets kept moving. Natural gas came back in third 5 minutes. Metals stayed dark until 1:45 p.m. That's 90 minutes. Some sources say close to 100. Let that sink in. The biggest metals futures exchange on earth went down right before a major delivery window. And when the gates opened, silver didn't recover. Silver dropped $3 in minutes. 91.30 to 88. No pause. No bounce. Just a wall of selling.
Gold got hit too. $70 vanished.
2564 to 2500. Most retail traders were still reading headlines about trading resuming. This didn't feel like the market catching up. It felt like the market being forced lower. But the real story is the order book. During the halt, time-based orders got wiped. A orders got wiped. Only certain confirmed orders survived. The book was stripped and rebuilt from zero. Who wins in a wiped order book? Institutions with algorithms. They refill thousands of orders in seconds. Funds with co-located servers and direct market access. They react in microseconds. But the person at the kitchen table? He's asking why his stop didn't trigger, why his limit order disappeared. So ask yourself, if this was random technical failure, why is it the second major CME disruption in 21 days? Years quiet. Then February gets two big incidents. Pattern matters. Under the price chart, the vault numbers are shouting. Registered silver keeps shrinking.
That's metal actually available for delivery.
When deliverable supply bleeds out right as delivery window approaches, the system becomes fragile.
Now look east. Shanghai spot around 101, Western spot around 89. That's a $12 premium. And during the New York sell-off, that premium didn't narrow, it widened. Physical demand stayed strong. Paper price fell.
That divergence is not noise.
And Shanghai is enforcing position limits hard. Multiple trading groups got suspended for violations. When one side is clamping down on concentrated positions and the other side keeps experiencing halts, you're not looking at coincidence. You're looking at the same pressure showing two ways. Now watch gold. A contract month that should be finished still shows thousands of open contracts. That represents tons of physical gold. That's not paperwork. That's delivery stress. If gold shows stress, what does that mean for silver? Now the fair bearish case. Maybe it really was technical failure. Complex systems break. Metals clearing takes longer. The drop could be a stop-loss cascade in a thin order book.
Order cancellations could be standard risk protocol. Rollovers could reduce near-term delivery pressure. All possible.
But history says, isolated explanations look neat. The full pattern is heavier.
When halts cluster near delivery stress, when physical premium holds, when deliverable supply keeps shrinking, and when trust shifts away from futures, that's data, not hope. So think properly. Follow evidence. Like and follow.